welcome along CCHL. Thanks very much for accommodating. I know you had to change some stuff, Brian, to be here, so I appreciate you doing that. So really do. We'll hand over to you, and then we can take some questions at the end.
Okay, thank you. I wouldn't have missed it. We are here to report our annual report, and I'd just like to say that CCHL has had a good and stable year, and we're pleased to have delivered the increased dividend commitment to Council of 55 million. The results do reflect the contributions of every company within the CCHL group, and each business has met or exceeded its targets. It was a notable year of reset for CCHL, a number of new board and management appointments. The independent directors, Gil Cox and Bridget Geeson, they provided much needed stability, as you're aware, when we started out the financial year. And then we were able to bring on Andrew Baskand and Sina Cotter-Tate with your support, and they've added valuable skill sets to the board. I'd also like to acknowledge the councillors Coker and McDonald and ex-councillor Templeton, who served on the board throughout FY25 and who made a very valuable contribution. I can say that each one of those councillors has made a difference on the CCHL board. And I also want to acknowledge Matt and his leadership, and he won't like me doing this, but it's important that I do it. Matt took on the role just over a year ago, and he's built a strong team around him. Matt's understanding of the group's strategic issues and his commitment to the subsidiary and council relationships have really strengthened the group's shared purpose and collective effort, and that's serving us very well. And it's the strength of these relationships as witnessed in the reciprocity we experience day by day in our interactions. And it's important to note that I believe that reflects on the council CEO and the CFO. It reflects on you all, the mayor and councillors, and the subsidiary chairs and directors and CEOs and management. And it does illustrate to me the value of effective, genuine relationships with a collective commitment to the city and to the region. Before I hand over to Paula, I would like to just reflect on what is becoming a real strength of the group, and that is the common purpose and alignment across the portfolio governance and management teams. And this is going to serve us very well as we consider some opportunities to deploy further capital, such as the potential step change investment in expanding Littleton Port. The common understanding around potential investment needs positions CCHL to take advantage of these opportunities for the betterment of the group. I'll hand over to Paula. Thank you.
Thanks, Brian. As the financial highlights show, FY25 delivered a solid result for the CCHL group, with strong operating results across the portfolio contributing both to increased EBITDA earnings and net profit after tax over the prior year. Of note, EBITDA earnings up 12% over FY24 at 506 million. Across FY25, CCHL paid $55 million in cash dividends to council, in line with the FY25 SOI target, which was an increase on the 50.7 million paid during FY24. The CCHL portfolio value increased 635 million across the year, growing from 3.5 billion to 4.1 billion at the end of FY25, which was a 17% increase. So it's driven by a high value of CCHL's investments in its subsidiaries. Overall, in an environment of challenging economic times, FY25 was a solid year for the group, with strong contributions from across the portfolio supporting the achievement of group financial targets. Alongside the financials, impact work streams across intellectual, social and natural areas remain a core focus for CCHL, which Matt will speak to next. Oh, and Alan.
Thanks, Paula. With respect to our intellectual capital, it's worth calling out the positive work that has been done with respect to board diversity, where we've seen continued year-on-year improvements. But notably, this hasn't been about filling a quota for achievement of a target. It's rather the strength of the group entities continues to attract a really strong intake of governors both in 2024 and in the 2025 round that we've just been through. In terms of group gender diversity, it remains a work in progress, and the pay gap is something where we still see clear room for improvement. Te Puna Manawa is the flagship group Women in Leadership program, which is recently launched with its largest cohort yet. But there are various subsidiary-specific initiatives that are going on within the group, whether it's consciously introducing an element of flexibility within roles, rescoping job descriptions to exclude a small component that might be particularly unattractive, sponsorship of trade-related roles, enhancing parental leave policies, and we're seeing some of the fruits of this with one of our largest employers out there at Littleton Port Company, seeing a significant reduction in female turnover in the recent year. Looking forward, we do note the Associate Director program is just weeks away from its relaunch, and we are proud and slightly overwhelmed that we were faced with approximately 200 CVs as part of that process. We'll be excited to share the 9 successful applicants in due course. Thanks to Alana for joining us, and I'll pass over to her for our social and natural.
Next slide, please.
Yeah, I've got that.
Oh, you've got it. Cool. So, good morning. Our social impact in 2025 focused on cultural competence, on stakeholder relationships, gender diversity, and on health and safety. As part of that, we upskilled 129 staff in Te Reo, and we've expanded that learning program to New Zealand history and tikanga this year. We've now received all stakeholder engagement plans from our subsidiaries. The Women's Network is hugely successful and always achieves really high engagement in its events. And across CCHL, there's been a focus on health and safety, leadership and engagement, and we've seen a huge improvement across reporting and other lead indicators. We've also now established the Health and Safety Leadership Forum, of which the council is a member as well, which is helping to establish meaningful lead indicators and leadership initiatives going forward. Our environmental performance centred in 25 around climate change mitigation primarily, and I'd encourage you, if you want more information on this, to have a look at the CCHL climate statement, which we published at the end of October. That outlines the progress to date, the targets we've set, and how we are working towards those. We've already achieved a reduction of 12% on greenhouse gas emissions. We're looking for 42% as our target. Also interesting to note that we've achieved, if you include market-based mechanisms, a 31% reduction to date, which is part of our process of reaching that absolute reduction. There are a couple of subsidiaries that didn't achieve a year-on-year reduction in emissions. However, a lot of that, though 2 of them in particular, enabling the airport, that was largely a result of electricity emissions, which, as we know, are a lot easier to address than fossil fuel-based emissions. And then finally, we have the very active sustainability working group, which works across the group to plan emissions reduction initiatives and to implement those. Thank you.
Thanks, Lana. And given we're already 5 months into the FY26, it's sort of remiss not to come here prepared for a little bit of the forward-looking stuff, but there are a number of opportunities and challenges that all frame part of our thinking in the current year and beyond that really transverse the priorities noted that you can see on the slide. So to touch on a few, in respect of the biggest subsidiaries, the establishment of an approved customised price path at Orion is absolutely important to maintain that resilience to the electricity network while achieving a commercial return and supporting Christchurch's ongoing decarbonisation needs. At LPC, it continues its planning with respect to the potential step change port expansion to ensure South Island port infrastructure is not a constraint to commercially viable trade, developing the infrastructure in a sustainable manner in a very sensitive environment with an intergenerational focus. At Enable, we consider the evolution as it matures from a developer of fibre network to its more mature operating asset status. And notably, we continue to hold a valuable first option with respect to the Crown's interests in Christchurch International Airport that remains worthy of consideration should the Crown wish to monetise its stake. So just a snipping of some challenging and potentially very capital hungry opportunities, but thanks to a strong performance in FY25, we are very well positioned to contemplate these and other opportunities over the coming year. Thanks very much.
Great. Hey, thank you very much for that. It's a really good annual report, if I do say so myself. Tyler, do you want to go through?
Got a few quick ones, if that's all right, Sam. Thanks so much, guys, for that. It's amazing. And the impact looks just phenomenal. So I really appreciate the time that you've put in for this. And the first question is actually around the climate reporting. From the top of my head, I was under the understanding that for future climate reports that are obligatory for the major organisations, that's obviously going to be changing and being pulled away. Will we still be reporting on our climate impacts across the group?
You take it?
Yes, you're right. CCHL will no longer be mandatory, be a climate reporting entity. However, we've seen quite a lot of value in that process, particularly identifying risks and opportunities, and managing our emissions going forward. So we will continue to report. It gives us a little more flexibility to tell the whole story rather than sticking to the very specific requirements of the XRB. So you'll continue to see a report from us going forward.
Okay. The next one is around the appreciated capital across the group. Is there anyone within the group that actually is a major contributor to the appreciation of capital? Is it? I'd probably say it's the airport. Am I right in thinking that?
Yeah, absolutely. The airport was a major contributor in the last financial year. There was some market activity which gave rise to some valuation uplift with respect to airport assets generally, but we've certainly seen an uplift in Orion in the value of the network there with respect to the investment that's gone into it, and a solid result over at the port from its improved operational performance in the last year. So there's some assets there that contributed strongly to that uplift in this year, but over a number of years, it's been everybody's sort of had their contribution at various times.
And what about the other siblings? I'm probably thinking about the ones that are on the bottom three of the rung in terms of dividend.
I'd never refer to them as the bottom three. They're all equal. There's no one that's more important than the other.
You'd be better than me, that's for sure.
Yeah,
They're all part of the family.
They are, of course. I was just referring to the list, not necessarily them as a status.
Yeah, absolutely. Look, there's a gap between the size of sort of the big three, which is Enable, Orion and the airport, down to Littleton, which is a smaller asset, and then a substantial gap there down to the enterprise value of CityCare and again Eco Central. But it's hard to sort of compare them in that very sort of one-dimensional lens in terms of what they do. CityCare is one of the biggest employers and has a very, very large revenue base, has a national presence.
They're very agile
Eco
too.
Central performs quite a critical role. So yes, in terms of the big three, they provide a different contribution to revenue, different contribution to dividends. But CityCare's paying dividends, paying its way. We've just received one from Eco Central, they declared one very recently. So everybody's paying their way at the present time.
It's great you raised that, by the way, because there's more than financial benefit when it comes to these assets. Two quick ones was around LPC. Before the sticky ones come up, I thought I'd just ease into it. I'm not just going to go on hard here. But the first one is around the financial impacts of 25-26 with the obvious transition in the way that their staffing arrangements are made at LPC. what kind of impacts are you anticipating in terms of, I guess, the operations of LPC and the performance of LPC with that transition coming?
We've already seen some of it. There is some cost savings that come through this, but this wasn't a restructure that was driven first and foremost by how do we get cost out of this business. There's been LPC's been in front of council and talked about where they sit on the performance rankings in terms of port metrics for turnaround times of ships, container utilisation rates. So that's an important part of it. Health and safety is an absolutely critical part of this. No one here is comfortable with the performance of the port over the last 2 decades in terms of its health and safety performance, and so I think changes trying to address that. And so yes, there is a financial component, but it really is, it's not just about that. It's about operational performance and about people.
Thanks, Matt. And lastly is about the port expansion. Would you be able to talk in public about what the potential options are around the port expansion, what you guys are thinking?
This has been tabled for sort of the port recovery plan. This is not a new consideration at LPC. I can't talk to the specifics of that. That's still going through the LPC board, and options will come back to CCHL and potentially council to consider it in due course. But they're going through. They've been thinking about this for decades, and certainly over the last year they've been had a huge focus with respect to where to from here with respect to Te Awaparati Bay and its expansion proposal. So more to come.
Very good. Thanks so much. Appreciate that.
Great, thank you, Tyler. So I've got Kelly and then Tim, and then Yanni, and then.
Thanks, gentlemen, and thanks for the for that very good graph on page 114, which shows total asset values increased by 1.8 billion and shareholder equity by over $1 billion. That's really encouraging to see, and yet at the same time debt hasn't increased dramatically. My question is around, I guess, something that I think the general public would probably ask as well. If the port is going to expand, obviously debt is going to increase. Is that CCHL debt, or is that a business case based on LPC's share of that debt? How does that work?
All of the above. We are looking at this with an absolute CCHL group lens, so it even goes beyond the port and CCHL in terms of how we as CCHL group can best fund our assets. So that's something that is we've got to see what the business case looks like ultimately. LPC will have an ability to fund an element of that. There is absolutely likely to be an equity component that has to come from a requirement of the shareholder, but we're not yet at the point. That's something we've got to work on from here. Once LPC is actually committed to a business case and actually has the numbers behind that, then we'll work through a funding structure that is viable.
Just a follow-up question. Were expansion not to happen, to your mind, would it negatively impact trade in the South Island if we didn't expand?
I think there are some challenges with respect to the port infrastructure in New Zealand. You've seen Auckland investing in expansion to cater for bigger ships. You've seen the same at Tauranga. We don't have those sort of facilities in the South Island, so the market is moving. I think the statistic is 92% of the ships being built today could not actually berth at Littleton. They are bigger ships, and so bigger ships are coming. That's been talked about for a long time, so I don't want to over-dramatise that. There are a lot of smaller ships still floating around today. So I think, to answer the question, yes, there is a long-term challenge with respect to port infrastructure, and we need to adapt to that in due course.
Thanks for that context.
Okay, can we go Tim, and then I've got Yanni, and then we might keep moving.
Yeah, thank you, and thank you very much to highlighting the gender equality and kind of narrowing the gap, which is really good. I guess I'm looking at page 33, or our agenda's 133. City Care's Supporting Youth is a fantastic program. I'm just wondering, with AI was kind of deemed to be the great equaliser for those with learning disabilities, but it's kind of been a bit of a con, to be quite honest. So I'm just wondering, for those youth kind of looking for jobs, etc., and opportunity, does our family kind of look at that? I know that City Care is looking at it, but I'm just wondering, is that spreading through the environment that we have? Because the fact of the matter is, it's getting harder and harder for those with learning disabilities. I mean, they're not thick. I'm testament to that, and we won't go there too far. But I'm just wondering.
So you
what
asked
it is.
questions. So
Yeah.
Yep.
A couple of aspects to that. City Care is a big employer of people, so it's a really good test case to try these things. And if there's success within a City Care regime, we do look to try and leverage things across the group. But they are a much bigger employer than the likes of the airport. So the benefits we're getting from City Care doing something like this are quite pronounced. The other thing is neurodiversity generally is something we've had a bit of a focus on, and the people and culture teams of all of the subsidiaries have shown an interest in this, and it's been something that's been a topic of group-wide discussion. We've had a number of sessions so far, just at least educating and understanding and building that within the CCH group. So that's been a priority as well. So yes, there's always more to be done in this space, but we're making steps.
Very good. Yanni, and then Nathaniel, and then we'll move on.
Thank you. I was just interested in terms of the annual report. In our statement, or in our letter of expectation, we did make reference to the whole issue about being a good employer, about having positive relationships with unions, etc. But in the agenda, on page 115 of your report, 174 of ours, the highly engaged workforce, one of those measures around staff engagement says not achieved, but you haven't really touched on. So on the reasons for that, I was quite keen to understand how you gave effect to our request as part of the letter of expectation to effectively do what we'd asked around improving relationships with unions, being a good employer, etc.
Thanks, Yanni. It's a challenging one. We have to be really transparent here. We've been through a restructuring process at LPC this last year. I think that creates natural tension and challenges in any employer-employee relationship. So the uncertainty associated with that, the length of time that's taken to work through has been a real challenge. So I can only speak to the intention behind LPC going forward, and there really is a great intention to be a good employer out there and putting people at the forefront of what we do. A lot of health and safety is an important part of working at a port. We want gender diversity is an important part of that employee makeup over there at LPC. So there are things we're doing that we believe will improve that in the future. But this is not a one trick, an annual thing that you can turn on and off. Being a good employer, I think it's a really long term.
Can I just add to that?
Yeah.
I think that the change that has been worked through at the port has been challenging for all stakeholders. But this change is essential if we're going to improve the performance and the safety record at the port. So the commitment to that, I think, is admirable from all parties at the port, and though we do acknowledge that it's difficult.
Sorry, in our letter of expectation, we added a expectation around strong employer and union relationships, supporting collective bargaining, improved health and safety,
I think Yanni, so it's been asked and answered.
Those expectations, we're right behind those expectations. We hear them loud and clear.
Right. And if they're not being delivered, how do you think going forward we can look to deliver them?
I think the change, you talked to health and safety there, Yanni. I think we've talked to that a couple of times today about the intention behind the change proposal. So improvements in health and safety are actually at the forefront of what we're trying to do.
Okay, have you got any comment on
last one, Yanni, because we've got others.
Yeah, thank you. Have you got any comment on what's happening in terms of the issue of congestion charging? Just quite quite shocked to see what's happening at the port at the moment, given the expectation that we had, and one of the
Okay, so you've asked
rationale
question.
behind it seems to be an issue with the workforce.
Yanni, stop.
So
So this is the annual report. If you want to contribute something very light to this, you can. But I'm keen to move this
well, this
on.
was the looking forward
Yanni,
part
I'm
of
not
the
talk-
presentation.
Okay, we're going to move on. So can we go to Nathaniel, please? No, you had your chance, Yanni. Yeah. So, Nathaniel.
So on the safety thing, it's really good. That's sort of a strong emphasis. So you feel like safety is improving at Littleton Port over the last couple of years?
Look, this is, yeah. There's always more to be done, and I just know that that's an absolute focus of the board and management team that are in place today. So, to draw short-term changes into it's improved or not, I'm just very wary of being drawn down into that path. There are absolute commitment to improving it over time.
The incident severity rate has increased almost tenfold in the last year and a half. The incidence of lost time injuries has increased about threefold. Do you have any sense of when that's going to get back down to the levels it was at just 2 years ago?
Yeah, this is exactly what we're trying to fix, and what LPC is trying to address. There's elements of this which are, I believe, could be improved reporting, slips, trips, and falls. We were focused on absolutely major events. We've had some catastrophic fatalities out there, and that's first and foremost, that's a non-negotiable, and it's part of our targets that we don't have that. So, I can't give you an absolute. I know when that number's going to improve, but it is absolutely front of mind with respect to the way forward, and we accept that where it's been is actually unacceptable. So that's why there is a change process, or part of the reason why there is a change process that was instigated by Littleton Port this year.
Right. Just to clarify, I mean, where it's been was acceptable. Where it is now is unacceptable. Moving on from that though.
No, you can't. So the way this works is you ask questions. So if that's a question, they can clarify that statement if you like.
Yeah. So I guess the question would be: so what accounts? What accounts for the increase over the last 18 months of the rate of accidents and the severity of the accidents?
There have been severe accidents this year. I absolutely take that, but there have been severe accidents in a number of other years. There were a number of slips, trips, falls is sort of how they're classified, and they did cause lost time injuries, and we would need to introduce better processes around that. That actually accounts for a lot of the increase in the current year. But there's a level of detail there that I have to investigate if you've got specific trend analysis that I can come back to you on at the end.
Cool, thanks. And just last question related. What's the progress on that? There was some, I think in the last letter of expectation around desire to exercise restraint on executive pay. Can you speak to that?
Yeah, this is something we stress every year with all of the subsidiaries, but ultimately, we do not set executive pay and do not at CCHL. That's a matter for the boards to consider in their own right with their remuneration committees. But the expectations of council, as per the restraint messages that come through in the letter of expectation, are conveyed to all the subsidiaries on an annual basis.
Thanks.
Yeah, just a quick one. On your sustainability measures, you said that you'd missed on electricity or something. Yeah. Why was that? Was someone turning on the diesel genny or something?
No, that's to do with New Zealand had a particularly bad year in terms of renewability of the grid last year. So,
right.
So it's
NZ or South Island?
New Zealand.
Yeah.
So we use New Zealand factors for calculating emissions,
right?
Which is a requirement under that
So it's nonsense.
Under the scheme. Well, we prefer to. That's why we prefer to use those market-based measures,
right,
which give us a better idea of how much renewable energy we are using at any one time. But we have to use the accounting frameworks that are
So it would
stipulated.
be good that if you use the accounting framework in one column, but then next to it in brackets we have, but we actually used 100% renewable, because otherwise we're trying to drive you in a direction where you're already there. You've already caught the bus, got off at the other end, and yet it's saying that you haven't actually logged on the bus yet. And so I just find it very odd. And Christchurch NZ have just walked in behind you, and they sell Christchurch on people coming here for sustainable business because we have access to 100% renewable energy. Then we own companies that say, but we're not using 100% renewable because of an accounting measure,
Yeah.
which makes a mockery of the whole.
Okay, let the
Yeah.
team, and then we're going to move on. Yeah,
Agreed.
Okay,
Yeah.
thank you.
yeah. It's valid.
So it was 100%.
Yeah, it's actually a really good question. That was-
Or
yeah.
just
No, genuinely. So if you've got anything you want to add, and then we'll wrap it up.
All right. There's a formulaic calculation as applying the rules as they stand. Really, we step back from this a little bit. There are some key things we've got to undertake to reduce our carbon emissions. Using less electricity usage is not really one of them. It's really around our port development and where we go with that, and our light fleet, which is particularly a city care issue. So that's where our focus is, not on did we use the more or less electricity and what was the emissions factor associated with that electricity use. So yeah, it's not about turning on the diesel genie, as you say, Aaron.
Yeah, but if you buy a fleet of electric vehicles, but then you're monitoring them at saying that they're only using 85% renewable when it's actually 100, the numbers are still going to be out.
The numbers might be out, but you can see our intention here is not
100%.
driven 100% by the numbers. We're focused on where our real emissions lie. We
cool.
can't control the grid. We're controlling what we can.
Okay, so that's been moved by Aaron, seconded by me. All in favour? Against? That's carried. Great, thank you very much. So can we welcome Christchurch NZ up to the table, please?
Thank you.